Thank you, our viewers, for joining us. I'm Karaga Baldwins, and we're coming to you live from the Kampala International Conference Center. And once again, we're bringing you such a brilliant and very value-adding discussion topic that is targeted and aimed at the improvement of the financial system of our country, and that is the security interest in movable property registry and the act that was passed for the purpose of trying to enhance the finance inclusive deepening of the population in this nation. So before we go into the direct studio discussion, let's have this introduction and then I'll be right back.
According to the Africa Development Bank Strategic Analysis for the Financial Inclusion Pathway of Africa, between 2013 to 2022, the continent is at a turning point. It observes that many countries have achieved high economic growth rates over the past decade, and many are attempting significant structural transformation, but the good performance has not translated into significant poverty reduction and shared prosperity. For the realization of sufficient poverty reduction and shared prosperity, there has to be inclusive growth. The concept of inclusive growth is multifaceted and has financial inclusion as one of its main building blocks. Financial inclusion encompasses all initiatives from both supply and demand sides within the financial sector. They include provision of appropriate and quality financing that is both accessible and affordable to low-income and other vulnerable households. Notably, they target groups traditionally excluded from the formal financial sector. Uganda's access to financial services has improved dramatically in recent years, with more than half of the adult population now having access to an account at a formal financial institution. This is almost twice as many as in 2009. This positive development is only one piece of the puzzle, given that a very small proportion of individuals, households and firms are able to utilize the formal financial system. Up to 60% of adult Ugandans still keep their savings at home and in the form of assets such as animals. Moreover, a much larger share of the population, reaching more than 65%, are unable to access formal financial institutions for credit. In a bid to stem the persistent challenge faced by Ugandans in accessing credit, the Uganda government in March this year passed the Security Interest in Movable Property Act, allowing Uganda Registration Services Bureau to work with the financial sector deepening Uganda, Bank of Uganda and local banks to set up a formal movable collateral securities registry. With this legislative development, the Uganda Registration Services Bureau, in conjunction with NTV, have found it pertinent to have a comprehensive discussion about this legislation and the registry in the endeavor to foster deeper financial inclusiveness in the country. You're welcome.
And indeed, I'm Karaga Baldwins, and that is a very quintessential topic that has been properly elaborated in that introduction. And on our social media platforms, we put a question asking you that, do you think the government passing a legislation permitting banks to provide loans to Ugandans who present, of course, things like cows, crop fields, and cars as collateral is going to enhance the credit access situation of Ugandans? And quite a number of responses. Let me just cite out about a few, like 3 or 4. Kiza Ezra says that we should also put our dreams as collateral security for loans. Then Gerard Wanya says that the idea is welcome because more farmers and peasants will access loans to boost on the sector. And Senkumbi says that this must be started with government-owned banks. They should also lower the interest rate in commercial banks for them than being interested in making profits. Just on Twitter, let me get one particular response. Henry Briggs says that that would be a good idea, but look at the interest rates they levy on us, and remember, it's seasonal. Cows may die, crops may not yield as much, and we're going to deal with those particular concerns of yours in this discussion. Right now, in studio, I have a prolific panel of experts in this field, people who are practicing the implementation of this particular act. And on my extreme left, I have Henry Mpindi, Finance and Administration Manager, Association of Microfinance Institutions of Uganda, AMFIU. Henry, you're welcome.
Thank you.
Indeed. And right on my left, a great lady who is the second in command in Uganda Registration Services Bureau, Jen Okot Bitek Langoya, Deputy Registrar General. Jen, you're welcome.
Thank you. Thank you, Borden, and good evening.
Indeed. Let me start with you straight away. This particular security interest in the Movable Property Act, which has been enacted, rather, it was appended to by the President with his signature in March, and it makes these provisions that there's a creation and perfection of security interests, provides for rules for determining priority of claims among competing claimants, provides for registration of security interest in movable property by notices and others. Quite a complex enumeration of provisions. So in your own summary provision, or perhaps submission, what is the very essence of this particular act to Ugandans?
Okay, thank you very much, Baldwin. One of the main essence of this act is to provide financial inclusion, especially for the MSMEs, micro, small, and medium enterprises, who actually perform 90% of the private sector in this economy and provide for 90% of the jobs in this country. They are mainly composed of the women, the youth, and the people with disabilities. We know very well, ordinarily, the banks want land as collateral. The group I've told you about, the women, the youth, and the PW, rarely have land. So this particular act provides so that this group can also have access to finance by giving movable properties, properties which each and every one of us can have. And we find that most of the businesses in Uganda hardly succeed to their 5th birthday. Why? One of the major reasons is access to finance. So with this act, we are hoping if you can use your phone, your settee in the sitting room, to get money. You, the chapati, the Rolex person, you use your mobile phone because you need 200,000. The phone is 500,000, and get that money. You make more chapati, grow more business. You can get a restaurant of your own at some point. So that's the financial inclusion part of it. The act also will give the rights and obligations of all the parties. We have the financial institutions who are going to give the money, the borrowers, and then also the third parties, because as you put up your property as security, you might also be selling it. So the third parties should be able to know what is the status of this this thing I'm buying. Has it been secured or encumbered? And then the creditors, the secured creditors, would be able to have transparency. They can check within the registry and see how encumbered a property is, and therefore there's more transparency, and hopefully it gives them more confidence to lend.
This nearly sounds synonymous with the land registry itself that is there, because it's the same process that they undertake to check on property, land that is on sale. And,
But you'll notice that the land is immovable property.
Absolutely.
And that's what the banks have been banking on, because when it's immovable, it doesn't move anywhere. You'll get it always. But movable property are now properties that can move, glass, phone, the things that are not on land or buildings. And that's what this particular registry is dealing with. The one that's dealing with land has a certain class of people, people who own land. But this is dealing with, and I was happy somebody mentioned it on the social media, how can the interest rates be reduced? The lenders need to have confidence that they will get their money back. So what has been happening, and we found this when we did a bit of stakeholder engagement, this person will take this car to this microfinance, then take to another. And at the time of enforcement of a foreclosure,
you have different creditors
who are and those are the things that this act is going to address.
And we're going to talk a bit more elaborately on the issue of the registry itself, because it sounds, as I said, synonymous with the land registry, as much as they're dealing with different categories of issues. So just a bit of the concepts, Henry. You give a description of what a security interest is and movable property, and how exactly does the Act articulate the procedure of securitizing these movable properties, as she's saying, like really a phone. That sounds intriguingly awkward that you're getting my phone has to be a collateral for a financial loan.
Thank you, Godwin. A major security interest is, when you talk about it, is a property right in a movable property that is creates an agreement between the secured creditor and the grantor. So in this, we are looking at a secured creditor and a grantor, but in major we look at a grantor who makes a decision and has a right.
Okay, so the grantor in this case, is it the bank or the person who is seeking the loan, who is borrowing?
The grantor is the person who is borrowing.
All right, yes. Just make it as simple as...
Oh, fine. A secured creditor is the institution that is lending.
Yes.
So in this case, there is an agreement between the borrower and the lender. When they go into an agreement that I want to borrow this amount of money, I want to pledge my security, you go into that agreement, then that agreement is what we call as interest security. Yeah. Okay,
so the movable property is all these other options, that things that we move, the cars, as she says, a sofa set.
Yeah.
But how do you qualify based on condition? What assessment procedure do you undertake to qualify that this is something really credible to securitize as a collateral for any kind of financial transaction?
Basically, the procedure there is what we call creation of a security or interest, whereby we have it's still an agreement between a grantor and the secured creditor. They come into an agreement. Then also the grantor has the right, and also he has the powers to encumber the assets in case he accesses the loan.
Okay, what I'm asking for, maybe
if I could just add on to, and he's on the right part, if I could just add on
do
to
you
what
consider
Henry is saying.
the longevity of the lifespan of the property?
There will be many considerations by the secured creditor, but for purposes of our registry, we need to be able to identify.
The property.
For the phone, there are serial numbers.
Yes.
For the car, there is the number plate.
Yes.
And
engine numbers and all.
If it's your cows, what kind of are there?
Exactly. That's what I'm.
So the description has to be so apt that whoever is reading it will know that this is it. If it doesn't have serial numbers and all that, you look for the other descriptions, but you make it descriptive.
Because if you bring in crops, if you bring in all these perishable risk properties, it sounds extremely difficult for an institution to go into that kind of loaning arrangement when they know that perhaps this cow is going to be mixed up with some other cows, or is going to get diseased, or someone is going to scrape off the serialization that had been done earlier on.
That's why they give you breadth in description. For instance, for the crops, it's going to be in a particular land. That land, we know it. You describe the land, but you're not taking interest in the land. It's just the crops on the land.
Okay. So
the cows,
they
are these brown cows with whatever spot, and very apt, very discrete kind of description.
Okay, so with that introduction and creating a lot of curiosity and intrigue given to me who is interviewing, let me go for a break. We come back and talk about the registry itself, how it's composed, how people apply into it, and the system is going to work with it, and the public itself. Thanks our viewers for this particular attention you're giving to this discussion. I believe it's going to enhance your understanding on how to get to engage into the finance system. Let's go for a break and I'll be right back.
Munnabyafaayo Nelson Mandela lumu yagamba nti ebyenjigiriza kyekyokulwanyisa ekikulu mu kukyusa ensi eno. Era mu Uganda ebyenjigiriza byakwemmenta ensimbi eziri eyo mu buse 3.2 mu mwaka gw'ebyensimbi oguddako. Era mu kino akasekalamba kakuvujjirira enkola ya bonna basome ku mutendero gwa primary mu masomero emitwalo 3,600 mu 456. Olwo ate obuwumbi 137 bwakuddukirira bonna basome ku mutendero gwa senior. Ate obuwumbi 88 bwakugenda ku matendekero aga waggulu n'okusingira ddala eri abo abasoma ebyemikono. Kati nno kino kitegeeza nti gavumenti yakusasanya siringi 8 ku buli mwana owa bonna basome ku mutendero gwa primary omwaka mulamba. ekibuuzo ekyebuzibwa wano kiri nti ensimbi zino zinaamala okusomoozebwa okweyongera buli lukya ku byenjigiriza n'obwetaavu bwa bannayuganda okufuna ekyokuddibwamu ekyo goberera embalirira y'eggwanga ng'esomebwa ng'ennaku z'omwezi 13 omwezi ogw'omukaaga omwaka 2019. Bannaffe, embalirira y'eggwanga buvunaanyizibwa bwaffe ffenna. Obubaka buno bukutuusiddwako bannakyewa aba CSBAG, Minisitule y'ebyensimbi n'okuteekerateekera eggwanga wamu ne Uganda Revenue Authority, URA.
This is BB Cool #1 member. You have what?
Wala ngine ebifaananyi yo biri ng'okyali muddugavu wakikola otya?
Omuntu eyaliwo ku boobote nze kolera ki owa Museveni? Era akanyiga bw'akongeza bw'ati.
Abafudde Goma mwangwe basi ebaleka.
Waliwo omuwumbo. Koma obubonero busatu.
Don't touch that dial. Keep it locked.
Nasinziye likikuwa.
This is your one and only Queen aka Swag Mama.
This is Jaguar and you're watching Comedy Store with
Alex Mohanje.
You don't have to look any further. Get online and you'll get any property.
It's all about joinery. How best do you give a tree a very good second life?
Because there's already development happening around.
Say, for example, carpets, thick, luxurious carpet, and you say, I've got to have a carpet wall-to-wall in my house, but we're a hot country.
Welcome to the Property Show, where we make real estate sense.
Thanks for joining us again. I'm Karaga Baldwins, and we're talking about security interest in movable property. Quite an unfamiliar concept, but it's issues of how do you present your cows, your car, your home or domestic property that you have and you cherish that much to make sure that you go and get a loan in the bank, which is different from immovable property like land. And we've asked whether you think that particular principle, rather that policy, or this legislation is going to make any enhancement in financial inclusion of our population. And Eddie says that my opinion might not matter, but anything that empowers people and facilitates their well-being is a plus. Restocky says that we all know who have cows, crops, and government cars. So then lastly, Wabui says, yes, it will be an enabler for financial inclusion, since the youth and women can't access credit for lack of collateral securities. Jen and Henry, you're getting these responses. Quite intriguing. So first explain the technicality, of course, of this installation or this facility you're going to put up, the security interest in movable property registry, and how it is expected to be used by the public.
Okay. This registry is going to be a 24/7 accessible registry. Before the registration, the two parties, the creditor and the borrower, the grantor, have to create the interest. They have to create that interest by having the agreement saying, I'm going to give you this money, but you're going to give me this security. That is the creation of the security. And then now that created security should be registered. And this is what we call perfection of the security interest. There are three modes. Number one, registering with us. Once you register, once you perfect, first of all, once you perfect your security, it is noticed to any third party that this property is encumbered. So if you buy it, you have to take it with my interest. Okay?
Encumbered means that there's a condition that has...
There is an interest.
Yes,
there's an interest on the property. So for me, the creditor, I have an interest of, say, 40 million on that car that you want to buy for 200 million.
And no one else should.
40 million belongs to me as long as this person does not pay me what I'm supposed to be paid. So to perfect it, to give that third parties that notice that you have interest in this, you register the interest with us. That's one. Or secondly, if you have possession, there are some security interests that there's some securities, collaterals that are actually taken possession of by the creditor. It's normal, it happens.
Creditor, an example being maybe a microfinance or a bank.
Yes, they may decide to take your property. And that is called constructive notice. I have it. There's no way you're going to say you didn't know. You know that it belongs to Baldwin, but I have it as a creditor. And then the third one is for control, but relates to bank accounts. If the bank is giving you credit, and your account is the security, the bank has control over it. So those are the three ways. So the registry is mainly to create and perfect those interests, then by registration, and then it helps to create priority, to establish priorities. A car would be 400 to 200 million. You need 10 million from this creditor, 10 million from another microfinance, and all that. This registry helps you establish the priorities. If you fail to pay any of them, who gets paid what first, second, and how? Yeah. So, and the perfection is the priorities established by the time, the date and time, up to the time. So if we both registered today, if I registered at 5 past and you registered at 10 past, my registration takes priority.
It's just a precedence. Okay,
yes.
Great. And I think it's a bit understandable. How does this, you know, Uganda apparently has a population of 42.8 million and over. That is on the United Nations Population Fund estimations. UBOS still has its own undergraded population figures, which is still in 30s, which is awkward in itself. And actual unemployed adult population is 47.8%, and the report on banking and the status of financial inclusion in Uganda indicates that in 2018, 11% of adults used services from banks. Of those who used banking services, 9% had accounts. And while 2% did not have accounts, but using services without owning an account include over-the-counter transactions. Okay, just the background to get to know the actual usage or the inclusiveness of the financial system. So how does this registry system help in enhancing the financial inclusion? How is it going to improve the usage of the banking system, which is more secure and gives a better reporting?
Basically, the registry is going to help because, as I told you, when you look at this sector, 90% of people have included in the financial services are using movable chattels. And these are people who have started right from a group lending, and they have been graduating.
First, chattels is what?
Chattels are these movable properties.
Okay, but it's an interchangeable word synonymous with property.
Here we look at trading stock.
Yes.
We look at negotiable instruments like we look at the checks. We look at share certificates. We look at motor vehicle. We look at households. For example, if I have my fridge in the house, I can use it to get a loan. And we have seen 90% of Ugandans are included in that because they're using their chattels from home and they have been graduating. I take an example, those MDIs you see, the big banks, their cash cow is in group lending. And under this group lending, people are using these, we call them petty chattels, and they have been graduating. You see someone getting 300,000 to sell tomatoes in the market. But you see the first cycle, you get 300, you get 500, you see this person is graduating, not until he gets a land title, go to the bank. So we see it has been so helpful that these people have been able to access the financial services. So it has helped so much in the financial inclusion of Ugandans to make sure that they access credit. Then secondly, the security, the movable security, it helps in mitigating the risk. For example, if I pledge my security to Bank A, and at one time I fail to pay, so this acts as a backup for me, that in case I fail to pay, at least there's some security. And then thirdly, it's about, it reduces on multiple borrowing. Under this registry, if you reduce the interest in the security, then it's encumbered. So if Henry, I borrowed money from Bank A, using the same security A, that is motor vehicle. And my details are registered. The serial number, the logbook number, the model, everything is registered. So what happens is I cannot use the same collateral to get a loan from a different.
You know, that's very subjective a bit, because for me, I'm telling you, rather based on how I know the creativity of our citizens or us as human beings, we can always recondition these things. If you're talking about a fridge, I just go and recondition it, remove the serial number. But that's quite a divergent issue, a bit digressive, but I'm just giving you as a snippet of the difficulty in trying to be sure that that property which you registered is going to be secure throughout the process of keeping by the person who has borrowed. You know, the commercial credit rates on loans by banks is between 21 to usually 28% in Uganda, and you have hundreds of persons and companies losing properties, with economy watchers struggling to explain what is going on. The Observer, a magazine which I think you're familiar with, made a report, a survey, and showed that at least 50 properties are advertising a week, totaling to up to 200 every 30 days. And there's a fear that banks have exhausted the land pool. Now, the land, I think, is oversaturated. They are seeking to now grab other particular property. And the question will be to you, especially who is representing microfinance, why the interest in movable property? Why do you go too petty, so low into this particular grade of even what someone owns of 300,000 shillings? Yeah, it doesn't seem justified.
Majorly it is, because now, as you can see in banks now, formal banking, they are going back to those who are using petty charters. Reason being that these formal banks have seen that the population they are serving is little compared to the entire population, which are supposed to be included financially. So what happens is these people are using charters. It contributes 90% of people who are included financially. Those who are using charters. So the banks are saying now it is the way to go, because first of all, there is the risk is spread. Those who are using charters, because majorly we are looking at those who are doing group lending. You see the risk is spread, and because they are giving them, for example, 3 million, 2 million, 1 million, and 5 million. So the risk is spread, and also they are serving a bigger number compared to those who have securities like land and plant and machinery.
No, I fully agree with you, and maybe Jen can add on this. The question actually is about the lack of trust by the population in banks. That banks have now, in Uganda, turned up as to be plundering schemes by giving loans and trapping people, and to the point that they are stifled and they can no longer be able to pay back this particular interest and loans. And then they grab their property. There are people who are tycoons here in this particular country known for that particular kind of strategy. And so it is seen as just an extension of the arm of banks grabbing more of people's property than just trying to generate the aspiration you're saying of financial inclusion.
Then what happens? And right now, under Tier 4, that is there's a microfinance, Uganda microfinance, which is Registry. It has Tier 4, but it prohibits money lenders and MDIs to use transfer forms as collateral for loans. The law is there now, because before the money lender used to say, "You've sold me this house at 5 million." But now, under this new law, the Tier 4, it is very clear. It says no more using of transfer forms as loan collateral. Then secondly, we have the principles of client protection. The Bank of Uganda drafted 7 principles of client protection, and all the institutions that are regulated by the Bank of Uganda have to abide by them. I talk about product design and delivery, whereby you're supposed to design a product that suits the clients and also their needs. For example, if you want to design a product, for example, agricultural product, then at the same time you're saying you are supposed to pay on a monthly basis, yet the harvest is after after 3 months. That means this person won't be able to pay on time, and they're going to grab his what? His security. We have fair pricing as a principle, whereby you're supposed to charge the fair price or interest rate, so that these clients are not burdened to pay back the loan. Also, we have fair pricing. Then we have fair treatment of all clients and non-discrimination. That all institutions are advised to treat all the clients in the same way. So then there is also transparency. Transparency in this, we need to give clear information to all the members, all the clients, so that if I come to the banking hall, I see all the information related to an institution, talk about the bank charges, talk about interest rate, talk about all the charges related to the loan. So by the time I get a loan, I have an informed decision. Then also we have the complaints handling mechanism. Before, it never used to have the platform. But right now, there's a platform that if Henry have got a loan from Bank A and I'm not satisfied, there's a platform I can go to. As the Association of Microfinance, we have the platform, and it has helped us to arbitrate between the client and the institution. And we have been able to resolve many complaints. And we see it has even reduced the issue of court cases that have been cheated here. My security is confiscated. They're charging me this a lot of money. So under those 7 principles of client protection, they have helped us so much.
Okay, so you feel that the borrower or the client is well protected
now
under this particular...
well protected, and also, as I said, under UMRA.
Yeah, just as let me have Jane make a supplement. And as you do, you help to enumerate the rights of the bona fide borrower and what are the rights and obligations under this particular agreement arrangement.
Okay. First of all, to go back to your...
my suspicion or my fear, yes.
This act requires good faith from both the borrower and the creditor and whichever third party comes into this. And I think as Ugandans, we need to get to that. You know, you go to these developed countries, you just get into a bus, get out, nobody follows you, because they know the moment your bus ticket runs out, you're going to pay and renew it. We need that good faith, that kind of good faith is required. But then also we are concentrating on banks. This act for financial inclusion has much more than banks. We have the microfinance institutions who are already dealing in movable property anyway, but we're also hoping to bring in the money lenders, because they're now regulated. Oh. They are. There's an act. He may take
Tier 5, I told you.
Tier 4 Act. Yes. And then also the SACCOs.
Money lenders, just a slight pause. These guys who you go when you're in a crisis and they tell you, if you want 500,000 shillings, make sure that every month you're giving me 20%.
Yes.
Those are
they are going to be, they have not been previously regulated, but when you're regulated, and they're under Bank of Uganda.
That is the Tier 5 I told you. That we just the deposit microfinance institutions. Yes. It talks about money lenders and even SACCOs. Regulated by UMRA. Yes. Tier 4.
So the point is, it's much more than banks. And within this act, just like in the Tier 4 Act that you was talking about, any institution, financial, that makes a debtor sign off a transfer with the intention of taking over that property, that's illegal. So it will not happen.
That presupposes that me who is borrowing, I'm knowledgeable of that particular provision or protection that I have, that I can reject the loan. That is if I'm not very desperate and perhaps ignorant and illiterate, that I can...
But we have in the plan, at the moment we are setting up the registry when user acceptance testing level, but we have the plans to sensitize and communicate, and it's going to be huge, so that everybody, just like he's saying, you know that in the bank, if I have a problem, I go here, everybody will know what to do, when and how, because we're going to do that. Communication is going
so you're giving an assurance to the whole population out there that if people engaged in this particular registry provision for them to get their property, which is movable and registered. They will be secure, that they won't lose their property so easily. They're not going to be given exorbitant interest demands on those properties.
The interest rate now is it's a contract. What you do with your creditor is out of our control. Because if you are going to agree with the SACCO that we are going to give me this money, I'm going to pay you 15% interest. Ours is actually a notice board. You have there that this is the creditor, this is the debtor, this is the security interest, this is the amount of money.
Yeah, the issue of interest is between the secured creditor and the grantor.
That's why some people feel that the government needs to step into this interest charging business, because it's actually where the conundrum is, majorly, that people are extorted and they are trapped because of desperation and they lose all their property. And this is how banks get excited and money lenders. But when we come back up to this break, Henry, you're going to help just now get the extra picture, because I hear intellectual property can also now be collateralized, which is very intriguing. Viewers, let's go for a break. They can come back and wrap up this discussion for the betterment of our nation.
Hi, my name is Brian. Some call me Mr. Budget. Now, Nelson Mandela once said that one of the most powerful ways to change a nation is through education. And in Uganda, our education allocation for the next financial year is approximately 3.2 trillion shillings. Of this, approximately 1 trillion shillings will be used to finance the UPE program in the 36,456 schools, while 137 billion shillings will be used to finance secondary education and 88 billion shillings for skills development in tertiary institutions. For the UPE school-going child, government will spend 8,000 shillings for each child the entire year. The question though is this enough to address the increasing educational challenges and needs of Ugandans? To get that answer, please listen to the budget speech on the 13th of June, 2019. Our budget, our responsibility. This message is brought to you by CS-BAG, Minister of Finance, Planning and Economic Development, and URA.
I'm feeling super, Zendi super, I'm feeling super.
Ofune super feeling olwaleero okuzanya ku MTN nyiga star 165 star 33 ate ku Airtel nyiga star 185 star 33 yingizamu enamba zo 3 zinamukisa ozeeko NTV teekamu omwendo gwa sente zoyagala okusiba okuva ku siringi 10 okutuuka ku mitwalo 5 olwo
shape, height, weight, color. These are the things the fashion industry measures to find the perfect model. But most aspiring models don't have the required measurements. They're often criticized for the way they look and told they'll never make it on a runway. But what if they were given a chance? What if, for once, someone told them they're beautiful just the way they are and that they can be successful models? It's time to change the unrealistic standards of beauty, and we're here to do just that. We are the Fashion Hero. The first fashion role model series that is changing lives and disrupting the fashion industry.
Snap out of it!
Join us with our host Brooke Hogan for this groundbreaking new series. The world's very first Fashion Heroes. Fashion Heroes!
Thank you for keeping with us. And on our social media platform, we've put there another question asking you that what should be done to enhance access to credit to Ugandans and improve financial inclusion of the majority population of the nation, which is still in the same context, in the line of what we're trying to discuss about this particular new registry that has been put in place by law. And Busoda Twaha says that cut the interest and reduce on the tossing of these applicants. People fear the high interest rates and the long process involved. Nakakande Fauzi says that increase awareness to enjoy banking facilities for loans and savings, though on the other hand, if a bank gives you rabbit, it collects a cow. And lastly, Salamander says that the central bank should reduce the bank rate, and this will go a long way in solving the problem of high interest rates charged by commercial banks. And unfortunately, the central bank keeps on reducing this central bank lending rate, but the commercial banks don't heed to that particular reduction. And I guess they are listening, or they are hearing this particular complaint. Yes, Henry. So you have you have now an extension of your lending pool into intellectual property, which includes copyrights, includes industrial designs, includes all these particular trademarks. Yes. How in the world is that going to work?
Thank you, Godwin. Intellectual property, that includes trademarks, patent copyrights, industrial designs. These ones can be converted into the movable property in that, for example, when you talk about trademark, here we are selling the name or the reputation of, for example, a company. Take an example. If there's a software provider, take an example, Neptune, and we are serving.
Neptune is a bit far-fetched. Let's talk about like hardwares. I have Hardware World. It's a brand. Hopefully, that's just a bit speculative. Hardware World. That is my patent.
Hardware World. Yes, that's a trademark patent. Now, what happens? You have people you're serving, you're supplying the products or the service. Now, you have a license, and this license, it is payable. Like it's payable on an annual basis. For example, I was giving you for the software, but now we are doing for the hardware. Say you're serving, for example, 100 people. And you have a license you're giving them, and they're supposed to be paying on an annual basis. So you can use that license, because you have invoices for different people you're serving. You can compare the invoices that are going to be paid in terms of the license on an annual basis, and you can use that to access credit. So
future income projections are the ones you're collateralizing because of the brand or
that is it.
Wow.
So I was giving also an example of software providers. You can be having like 50 institutions you're providing the service.
Yes.
Now what happens? These people, you give them annual licenses, and they're supposed to be paying on annual basis. So still, you look into the invoices for all the institutions and see, after the end of year, I'm supposed to get 200 million from this license. So you can use that as a basis to access credit from company A or bank A. The same applies to, for example, you talk about, take an example of Coca-Cola. They have their patent, they have the formula of,
that's huge.
they have a formula of coming up with Coca-Cola. So they can still extend the license to company A.
Yes, absolutely.
You get it? And it's through that license that you expect to get ABC, this amount of money end of year. So you can still convert that into collateral to access what? Credit.
Okay.
Yes.
We can have an extensive discussion over that particular area. It sounds very intricate, but at least you made a bit of simplification of it. Jen, so you go into this agreement. Usually the normal loan agreement with banks, of course, includes the interest that has been defined, both fixed and floating, default interest, prepayment, even so default committed or uncommitted repayment plan, bilateral syndicated kind of consensus in this particular agreement? Is it going to stay the same kind of composition of an agreement, or there are certain other areas of emphasis a person has to?
The agreements will be as per the institution, but there are specific things we look for purposes of the registry. We need the identification and of the creditor, the grantor. The grantor needs to show that he either owns the property or has authority to encumber that property. Then we need to know what the security is that the interest is going to be encumbered on, and its identification and all that. Of course, they both have to sign, plus a third party, a witness, who is a third party. And then we need to know the obligation and the amount.
That's it.
That's it for us. But you can have your 100 pages if you like, but as long as you have those for us, yeah.
Okay, so is there, for instance, there's a dispute on this particular contract or on this particular agreement. Is there a way URSB comes in to maybe do some sort of arbitration or intervention? Nothing.
Actually, the Act is very clear. The registrar has no obligation or liability in regards to the content. And as long as you have those few things I've highlighted, which the Act requires to be registered, that's what we need to register. The rest is between you and your creditor.
Between the creditor and then the grantor.
Yeah, which still leaves the people who are seeking for credit really in a vulnerable position, because all the time, you know, these institutions, the lending institutions which you're giving still this empowerment, have a lot of clout. They have a lot of power that at any point in time when a person is failing to pay in the terms stipulated, their property is taken, and this is the same thing that is going to be perpetuated. I don't know.
But as I say,
and I need, because you know, the provision usually is this, in this contract, that the lender shall make every effort in realizing the security by sale to ensure that the best possible price is obtained. But in any case, the borrower shall not be discharged from his or her obligations under this agreement in the event that the sum so obtained is insufficient to retire the outstanding balance on both the principal and interest. The legal costs incurred in the execution of this agreement usually is borne by the borrower. You can see the weight of... I know this is not your area, it's the registry, but I don't know whether when this particular act and even the registry, when it's being implemented, and you as microfinance institutions, there's a certain humane consideration of these encumbrances that I...
Yeah, but as I said, under the tier 4, because now it serves the bigger percentage in terms of financial inclusion, it talks about client protection, the 7 principles of client protection. When you go to the Bank of Uganda, they're catered for, and they're hanged in banking halls. When you go to UMRA, that is tier 4, it caters for microfinance institutions, caters for SACCOs and money lenders. It's a requirement that they are supposed to have the 7 principles of client protection, like what I said. And also, in addition to that, when it comes to money lenders, as I said, the tier 4 prohibits the use of transfer forms as loan collateral. So what I can say under the regulations and tier 4, they are fighting so hard to say that the clients are protected. And in addition to that, I told of the complex handling mechanism. As AMFU, we have it, but also under UMRA, they have it. And any institution that cheats clients many times and the client is complaining, that institution, the license won't be renewed. So as regulators, they have come out very strongly to protect the clients for being cheated. Yes.
Okay, and you feel it's a sure way of helping to
they have done it.
Encourage the public to engage in this. Okay, great. Yes. And Jen, as we're wrapping up, once again, I know you have alluded to this a little bit, and so if you're talking about this registry, how is it beneficial to the borrower? And when these particular properties are being registered, is it the borrower that goes and does the registration? Is it the creditor? And how beneficial is it to both ends, the creditor and of course URSB? URSB is at the center of this. You're the intermediary between the creditors and the lenders. Yes.
Yes. For URSB, we're offering a public service as part of government. We come in to offer the public service. For the creditor, there is that comfort provided because there's transparency. You know that the asset you're dealing with, you know how many other borrowers are there, and because of the registrations and all that with identification, you know that it won't just move out anyhow. So you're more comforted and you can lend. For the borrower, if there are more creditors lending, the microfinance, the money lenders and the SACCOs, the interest rates should go down. And as Henry has said, they're regulating all that as well. So with the interest rates gone down, more people can borrow. When you borrow, for the business, not for school fees and other, for the business, you expand the business, you hire more people. Remember, 90% of our employment is in the SME sector. You get more employment, more people creating wealth. We are running for the middle class economy. This is part of the contribution, especially relating to the URSB. Our contribution to how we can set the environment to enable us to get to that.
To
middle
deepen
class
financial inclusiveness. So is it, as just what I need clarity on, and I think the viewer, is it the person taking the loan or the person giving the loan that registers this property?
It's the person giving the loan to register. Because Baldwin, be honest.
So me, the borrower, have no...
you have the money. Now the person to protect that money is the creditor. And when you pay back, they discharge. It's discharge. And because they are periods.
So it's still the creditor that reports that this loan has been cleared.
And then we register. But we are also monitoring because there's a period you give for the loan. Once it expires, if you don't renew it, then we are going to pull it off as the registry. Because we're going to keep things current.
Okay, lastly, what has prompted, rather been triggered in my mind, you are now working like the central bank. What has happened?
How?
By you having that registry, because you're controlling this finance transaction issue.
It is a notice board. It is
okay.
a notice board showing the public, the lenders, and even me, the borrower, what kind of interests are on this particular property. If you have a car, and you want to borrow from a number of institutions, microfinance, and you've noticed I'm not talking about banks.
Yes.
It's the smaller borrowers, because this group of people usually need little money. It's not that much money. So if somebody else wants to buy that car from you, it's in their interest that they check and see what has Baldwin been doing with this car. If you have any loans against the car, it will be there. So that public is protected. They buy the car knowing, or they say, first finish off your loans. For the creditor, you also know, okay, he's got now 3 loans from others, but this car is 200 million and the total loan is 40. I can still give him more money. And you know very well, you can cover.
So more loan provision can be done over the same asset, provided the loan provision to the borrower does not exceed
the value of
the asset.
Yes. Many can lend against. But what has been happening is the debtors are going beyond. They go to so many microfinance that extinguish the amount, and sometimes the cars also disappear and all that. But now if your car is registered, your serial number, the chases and all that, even if you took it to Kenya, won't we find it?
And on that note, yes, just 1 minute kindly. Yes,
and the same question asked about how does the registry going to improve on the interest rate?
Yes, just 1 minute. I'm being chased out of here.
Yes. What I can say, because the main issue is to improve on the financial inclusion. So that means that when you talk about the economies of scale, when you include many to access financial services, that means that automatically, in a way, the interest rate will reduce, because you'll be able to meet your operational costs and the rest. But when you're serving few people, that means you have to hike the interest rate to make sure that you even can cover your operational costs. So in a way, it can contribute.
Yeah, you're coming from academics. I can. Jen, just 30 seconds, please. They give the message out. I don't know whether the registry has started being operationalized or like. Yes.
Okay, the Act is operational. We have the regulations as well. The registry is being set up. We're at user acceptance test because it's going to be online, no paper, just online. So it will be in the interest of everybody, the borrower, the creditor, and even the general public to keep searching and checking if you want a particular property, for whatever reason, what is on that property. If there's something, it will definitely appear there. So even for the creditors, make sure you register so that whoever is dealing with that property knows that you have interests.
For sure. On that note, very brilliantly say, very resourceful in trying to unpack the sophistication of this new facility that is being generated under this particular act. And Jane Okot Bitek Langoya, the Assistant to Deputy Registrar General, and Henry Mpindi, Finance and Administration Manager, Association of Microfinance Institutions of Uganda. You've been incredibly brilliant.
Thank you.
And I'm looking forward to hosting you again.
And registering.
Register? No, not yet. Thanks our viewers for keeping with us on this beautiful Saturday evening. And this is your #1 station. Please keep on contacting us as ministries, as departments, as agencies. And if you're an NGO or corporate institution, just if you want a very properly structured discussion in the interest of the nation and, of course, tailored to yourself, come talk to our general manager, myself, and the sales team. And we remain your #1 station. I'm Karaga Bodrins. Have a great night.